Hi you guys, welcome back to the channel. My name is Brad. This is the Firefighter's Financial Toolbox. Today we're going to talk about two iShares ETFs that I think are excellent for beginners. And it's a company that doesn't get as much airplay as say Vanguard or Schwab or Fidelity. We're going to talk about iShares by BlackRock. So BlackRock, first of all, BlackRock is the biggest investment house on planet Earth. They have $8.67 trillion in assets under management. And of that company, the iShares division is the division of their ETFs. And if you're not sure what an ETF is, it stands for an exchange traded fund. Basically, it's an index fund that follows an index that's traded on the exchange like a stock, so you can buy and sell it during the day. So why would you do this? Well, you guys know, for me, one of the biggest decision makers for me is cost. And iShares have very low cost funds, and both of these funds have extremely low fees. It's easy to buy iShares ETFs. If you already have an advisor, ask him if he has those. If you're somebody like us, most of the people in my community do it themselves. If you're a Fidelity member, they use iShares ETFs for their ETFs. So you can buy them, of course, commission free. But nowadays, if you have a brokerage account, you can pretty much buy these funds through any brokerage account. You guys, I hold one of these funds in my Vanguard account, in my taxable account. So you can buy them on M1 Finance, you could buy these on Robinhood, or even if you had, like, say, a Schwab brokerage account, you could add these funds. All right, let's get into the two funds. First two we're going to talk about. First one is the iShares Core S&P 500 ETF. That's ticker symbol IVV. Now, the first thing we notice is this fund's been around since about 2000. The expense ratio is 0.03%. That's 3 basis points, you guys. That means you're paying $3 for every $10,000 you have invested per year. That's it. Got a dividend yield of about 1.51%. And if we look at the top 10 holdings, we see number 1 is Apple, then Microsoft, Amazon, Facebook, Tesla, Alphabet Class A and Class C, that's Google, you guys, Berkshire Hathaway Class B, Johnson & Johnson, and JP Chase. And the top 10 make up about 27.3% of that fund. Now, this is an S&P ETF, you guys, and it actually holds a total of 506 companies currently, but it's always going to have the 500 in the S&P 500. The second fund we want to talk about is the iShares Core S&P Total US Stock Market ETF. That's ticker symbol ITOT. Now, this is the one that I personally hold, you guys. This fund's been around since 2004. It has the exact same expense ratio as IVV at 0.03%, so very, very inexpensive. This follows the S&P Total Stock Market Index. And this one has 3,604 holdings. So this has a lot more diversity in that it has large cap, it has S&P 500 companies, it has mid caps, and it has small caps as well. So from a diversification standpoint, you're getting more companies and you're getting more market capitalizations. But if we look at the top 10 holdings on this one, number 1, Apple. Number 2, Microsoft. Number 3, Amazon. Number 4, Facebook. Number 5, Tesla. Number 6 and 7, Alphabet A and C. Number 7, Berkshire Hathaway. Number 9, Johnson & Johnson. And number 10, JP Chase. It's the exact same list, you guys. The top 10 companies are exactly the same. Now, in this one, this only makes up about 22.5%. So it's a smaller percentage of the total fund. If we take a look at the sector breakdowns, and looking at ITOT, we see the biggest sector is technology services at 19.05, and then finance at about 15.7. Electronic technologies about 13.22, followed by healthcare at about 10.14. If we go down and look at IVV, we see same thing. Technology services 18.32, finance 15.39, Electronic technology, 14.61, followed by healthcare, 10.3. You guys, they're pretty close. If we look at how they compare, what's happened in the past is not an indicator of what's going to happen forward, right? We know that, but we can get an idea of how they'll perform. So once again, if we look at ITOT, it has about a 1.41% dividend yield, where IVV is a little bit higher at 1.57 because you've got all those S&P 500 companies that have been around. Year to date, ITOT's beating it a little bit. It's about 5.89%, where the S&P is only at about 4.29. If we look at the 1 year, it's really clobbered it at 21.58%. That's ITOT. But remember, small caps did really well last year. IVV is at about 17.44. Still an amazing return, you guys. Let's fast forward down to 5 years. So the 5-year return is about 18.32 for ITOT and about 17.56 for IVV. But if we go all the way out to 10 years, it gets a little bit closer. ITOT is about 13.69 and IVV is about 13.53. So in these time frames, the total stock index has beaten the S&P 500. That being said, that doesn't tell us much of anything other than that's what's happened in the last decade. Remember, the last decade, you guys, we've been on a bull market. We had a couple little hiccups, one back in March last year and a little hiccup back at the end of 2018. But other than that, the stock market has continued to go up, right? So we don't know that that's going to happen going forward. But the things that we can control are fees on our funds, right? Both of these funds have very low fees. Again, 0.03%. You guys, that's as cheap as any fund out there. Basically free. And you're getting good exposure to a lot of companies either way you go. If you prefer to invest in more established, bigger companies, then go with IVV. If you want all of the stock markets in the US more or less in one fund, then go with ITOT. Either of these are going to be really good options to build your US portfolio. And it's easy because it's one fund. You can use either of them. I think you can't go wrong with either of these two funds. Again, you know these are quality companies because they're backed by BlackRock, which again is the biggest investment house on planet Earth. All right, you guys, I hope you got something out of this. If you learned something and you enjoyed the show, do me a favor and drop me a like. It really helps the algorithm, gets my videos out to more people. If you're not already subscribed, I'm going to ask you to please hit that subscribe button, ring the bell. You get notified every time I make a video. I try to make at least one a week. All right, we'll see you. Thanks.